2023, and I want to go over a chart that is a very important chart. It's a chart that I sent out previously to you last several days, and I want to go over this chart, and I want to be able to show you the essence of accumulation and markup, and going that way. And I'm going to restart redrawing that I did before, so we can go through it precisely and go through this somewhat accurate as far as where we're at as far as that's concerned. This is a chart that you should have previously in the newsletter and member-wise. And we have been bullish for a long time based on the Wyckoff. And let's just see how this came out to be. Um, and should be able to show some nice schematic, okay? So it's a daily minute S&P, and today's February 2nd, 2023. So if we just take what the market's at right now, the market is in some type of up move. And we know that because this buying bar is bullish, increasing range and volume, bullish. So if we would look to market here, we would buy a spring in the market. We'd buy the market right here. Here's an edge to buy. Okay? Edge to buy, and your stop would be under this low. Not so close, it gives a retest, but under that low. Okay? So what happened? When we do that, the market acted nicely, went up nicely. The green is still buying, still overcoming selling. It takes 1, 2, 3, 4 bars to retrace 1 bar. Okay? So we want to buy retests of bullish bars and volume bars in a market that's trending up. Buying. Looks like the market held support, went up, and then we see some action that is ending action. Very large volume, low end close, and we will liquidate our position. Okay? Market, we want much higher, but the market said, you know what, that's as high as we're getting at this point. So we make a few shekels and the market's back down. Okay? We're flat, looking for the next direction. You can't be long after stopping action. Okay? But you make a little money. Fine. Not what we wanted. We expected more, but that's fine. The market is a change of behavior by stopping action. A change of behavior by stopping action. Okay? So, comes down here, market breaks. We have a market that grinds to make new lows. This is what we call a shortening of the downward thrust, an SOT. The market's making new lows, but gradually making new lows. What does that tell me? It tells me the speed of the break is slower than the up move. Indicates that the selling is drawing up a little bit, but does not make a bullish statement. Shortening the thrust, the first bar that we close better than mid-range bars, indication that the market may want to try some type of short covering rally. Low end close indicate maybe it's still selling. The last bar before a markdown that breaks the ICE support is right here. We want to mark that bar that goes across. Market tries to break, makes new low, increasing volume, sell starts being hit. The close indicates that there's transfer risk from the weak longs into the stronger longs. Comes down. Volume does not show supply volume, but still not bullish. We want to draw a line across from here. Gives us a little spring, but we're not buying the spring because it's coming from being bearish. Also, we don't have enough cause built into the market. Market goes up. The green bar, the buying bar, is now greater than the red bar, indicating more buying than selling. And then we have a bar like this, indicates beautiful Wyckoff behavior. We have a market That essentially buying for the first time is overcoming selling. Dynamic new lows. The market has an up thrust probe. It wants to see what supply is up there. There's no supply. So if there's an upside probe to go higher, we form a retest or spring to buy. Our first buy would be right here. Our stop is right here. So here, you want not put your stop too much here. Because if we're ready to go from the springboard position and the spring area wise, I don't want the market. We've done enough spacing to go higher. If we fail here, this spacing could be distribution. Don't want that. Market goes up, increasing volume, comes back down, decent volume selling, long liquidation, effort versus result, the same volume, and the ranges are much smaller. This is effort versus result or bag holding to the market. Bag holding to the market. The CM is keeping the integrity of the technical picture intact. Okay? The market should react upside if that's the case. It does. Market then doesn't explode in the area, but then does retest. How does it retest? Does that in a spring. Appearance, okay? On the spring formation. Since we're buying in the background of the spring, I want to buy this spring. Market goes up here. As long as there's no supply, I'm buying springs. Market comes down here. Buy edge buy. There's an edge, short of thrust. There's an edge. So every time the market's established in the background some bullishness, market then has a shorted downward thrust, effort versus result. Goes up, spring buys, edge buy, another spring yesterday. A very, very easy, simple chart to know, expect to know well. But the fact that we did not have supply, and the supply dried up on the bottom, indicated the market was going to have some type of shake out across that rally, which is what you did. So, having said that, we got when buying overtaking and selling, we're now able to buy the springs of the market. We had an objective in the newsletter of 4180 to 4200. We're at that point now. If we now draw a reverse trend line, okay, we really don't have one yet, but you can take it at 4317, and we'll see how the market acts as far as that goes, right? We don't really touch it yet, but I'm taking the reactionary high before we dipped. But you notice the springs and shorting of thrust. Shorting of thrust and springs are the way to get around. So I thought that was a very good day-by-day session of what the market did for today as far as that goes. Any questions? Okay, so that concludes the session on the anatomy of the S&P 500. I still think we're going up to new highs. I think we're going to go about 4,400 here, as long as we don't get supply in the market. So the shorting of thrust, the stopping action, the trading range that gives us cause, that gives us spacing, is critical. It's one of Wyckoff's principles, right? Effort versus result, cause and effect, demand, supply. We have that all in play here. And we consider it's LPS here. So that concludes that aspect of it. And this is the NASDAQ, which is stronger. You go back and look at the daily NASDAQ, you have the same type of situation, but their springs are even more clear of edges to buy. Uptrends, we want to buy our springs market-wise. This chart has really done a nice job with this stuff. So I want to thank you for listening to the Anatomy of the S&P trade, and have a great day, everybody.